In a tumultuous 24 hours, the cryptocurrency markets experienced a sharp sell-off, led by significant declines in Bitcoin and altcoins. Regulatory actions are intensifying across North America and Europe, affecting investors and the broader market landscape. Here are today's top 10 stories you need to know. In recent developments, blockchain technology has increasingly been utilized for geopolitical financing. A report by Chainalysis indicates that groups associated with Russia and Iran are leveraging cryptocurrency for funding low-cost military drones and parts. This trend raises serious compliance concerns within the cryptocurrency industry. The use of digital assets for military purposes underscores the need for stricter sanctions screening and transaction monitoring. As nations become more aware of these practices, regulatory bodies are likely to respond with tighter controls. The implications for cryptocurrency exchanges and financial institutions are significant. They may face increased scrutiny regarding their compliance practices. As the geopolitical landscape evolves, the relationship between cryptocurrency usage and national security will continue to be under the microscope. The industry must adapt to these challenges to maintain legitimacy and operational viability. The Grinex exchange, linked to Russia and under sanctions, has suspended operations following a cyberattack that resulted in the loss of assets worth about 1 billion rubles. This incident highlights the ongoing risks associated with cryptocurrency exchanges in the context of geopolitical tensions and cybersecurity threats. Investors are increasingly concerned about operational risks, especially as they navigate a volatile market. The suspension serves as a reminder of the fragility of crypto infrastructures. Even amidst price fluctuations, the potential for hacking and regulatory sanctions looms large. As the landscape evolves, exchanges may need to bolster their security measures significantly. This incident may push other exchanges to rethink their security protocols and compliance frameworks. The ripple effects of such events can destabilize liquidity and investor confidence in the market. French Finance Minister Roland Lescure recently advocated for the development of euro-based stablecoins, emphasizing the need for Europe to bolster its financial sovereignty. This initiative comes amid growing concerns over the dominance of U.S. digital payment systems, which have long overshadowed European alternatives. By promoting tokenized deposits, Lescure aims to encourage European banks to innovate and reduce dependency on foreign currencies. The push for euro-based stablecoins is not just about currency. It reflects a broader strategy within the European Union to enhance financial independence. As regulatory frameworks evolve, these measures could potentially transform the region's economic landscape, fostering innovation and competition. Additionally, the Bank of England has highlighted a slowdown in international stablecoin standardization, underscoring the urgency of Europe's strategy. If successful, this initiative could redefine traditional banking and payment systems, paving the way for a more resilient and self-sufficient digital economy in Europe. The UK's Financial Conduct Authority has ramped up its enforcement efforts, raiding 8 locations in London linked to suspected illegal peer-to-peer crypto trading. This decisive action underscores the regulator's intensified focus on combating illicit activities within the rapidly evolving cryptocurrency sector. The FCA's approach is not only reactive, but also proactive, as it is currently consulting on forthcoming regulations anticipated to take effect by October 2027. This dual strategy signals a robust commitment to establishing a legal framework that promotes transparency and security in digital asset transactions. Stakeholders in the crypto market are closely observing these developments, as they could result in increased compliance costs for businesses operating in the UK. Additionally, the enforcement measures may deter bad actors while fostering a safer environment for legitimate operators. As the regulatory landscape continues to evolve, the UK's actions could set a precedent for other nations grappling with similar challenges, potentially leading to a global shift in cryptocurrency regulation. U.S. Treasury Secretary Scott Bessent has urged Congress to swiftly pass federal digital asset legislation, highlighting the urgent need for regulatory clarity in the rapidly evolving cryptocurrency landscape. This call to action comes amid anticipation surrounding a significant decision from the Commodity Futures Trading Commission regarding perpetual crypto futures, which could fundamentally alter trading practices in U.S. markets. Historically, a lack of clear regulations has hindered institutional investment in cryptocurrencies, leaving many potential investors on the sidelines. As the crypto community grapples with this uncertainty, market dynamics remain volatile, with prices often swaying in response to legislative news. Investors are increasingly focused on how these regulatory discussions will influence their strategies. The outcome of these legislative initiatives holds the potential to not only stabilize the market, but also encourage innovation and growth within the sector. If successful, these efforts could pave the way for a more structured and robust cryptocurrency market, fostering broader acceptance and investment in digital assets. Canada is moving towards establishing a comprehensive framework for stablecoins, a significant development highlighted by Scotiabank's emphasis on the urgent need to modernize payment systems. This proposed regulatory framework seeks to clarify the legal status and operational guidelines for stablecoins within the Canadian financial landscape. With regulatory clarity, the integration of stablecoins into everyday financial practices could become more seamless, benefiting both investors and financial institutions. Such advancements are crucial as they promise to enhance payment efficiency and promote innovation in the rapidly evolving digital asset space. The focus on stablecoins is part of a broader global trend as central banks around the world explore the potential of digital currencies. As Canada sets this regulatory precedent, it may inspire other nations to adopt similar frameworks, potentially catalyzing a worldwide shift in how digital assets are perceived and utilized. Looking ahead, the establishment of this framework could position Canada as a leader in the digital currency arena, attracting investment and fostering a robust ecosystem for fintech innovation. Europol has successfully dismantled the Cryptomixer Bitcoin mixing service, seizing $29 million in Bitcoin along with various servers. This platform was reportedly favored by ransomware groups and darknet markets for laundering illicit funds. Crypto mixing services have long posed challenges for law enforcement, as they obscure the origins of cryptocurrency transactions, making it difficult to trace criminal activities. The significance of this operation lies in its potential to enhance regulatory compliance across the cryptocurrency sector. As on-chain tracing technology advances, exchanges and wallets that inadvertently interact with flagged flows will face increased scrutiny from authorities. This action sends a strong message about the tightening regulatory environment surrounding cryptocurrency mixing services. The implications for businesses operating in the space could be profound, as stricter compliance measures are likely to follow, increasing operational costs. The dismantling of Cryptomixer may deter similar services from operating in the shadows, fostering a more transparent cryptocurrency ecosystem. Moving forward, industry stakeholders must adapt quickly to evolving regulations to ensure sustainable operations in this dynamic landscape. In a notable market reaction, digital asset treasury stocks experienced significant declines, with companies like Strategy and Bitmine falling nearly 10%. This sharp drop follows the recent weaknesses in Bitcoin prices, which have been under pressure due to regulatory concerns and macroeconomic factors. The relationship between Bitcoin and these equity proxies highlights the interconnected nature of the cryptocurrency market. When Bitcoin faces downward pressure, these treasury stocks amplify the sentiment, resulting in broader sell-offs across the sector. Investors are increasingly treating these stocks as leveraged sentiment vehicles, mirroring the volatility of the underlying cryptocurrency. This trend reflects a growing awareness of how fluctuations in cryptocurrency values impact related markets, particularly during periods of uncertainty. The continued fallout from Bitcoin's price movements could reshape the landscape for digital asset treasury stocks in the near future. As more investors scrutinize the correlations between cryptocurrencies and their stock counterparts, they may adjust their strategies accordingly. Analysts predict that if Bitcoin stabilizes, these treasury stocks could rebound, but if volatility persists, further declines may follow. The coming weeks will be crucial for determining the trajectory of both Bitcoin and its associated equities. The cryptocurrency markets have faced a significant sell-off, with Bitcoin plummeting to approximately $84,000. This dramatic decline comes on the heels of a broader downturn, as the CoinDesk 20 index recorded nearly a 7% drop over the weekend. Major altcoins such as Ether and Solana have also mirrored this trend, reflecting widespread market apprehension. Analysts attribute this downturn to a confluence of macroeconomic factors, including rising interest rates and a general risk-off sentiment among investors. The recent hawkish signals from the Bank of Japan have intensified concerns, adding pressure to an already fragile market environment. This sell-off has far-reaching implications, affecting not only price valuations, but also overall investor confidence and market stability. Historically, such volatile periods can lead to heightened uncertainty among both retail and institutional investors, prompting a re-evaluation of risk exposure. The current situation raises critical questions about whether Bitcoin can maintain key support levels in the coming days. As the cryptocurrency landscape evolves, all eyes will be on the market's resilience and the potential for recovery. A sustained rebound will depend on external economic indicators and the ability of market participants to regain confidence amid ongoing volatility. As the cryptocurrency landscape evolves, regulation remains a central theme. Recent developments indicate that the White House is actively engaging with the crypto community, with President Donald Trump scheduled to address a significant cryptocurrency conference in Palm Beach. This political attention is crucial, as it has the potential to shape future legislation and enforcement priorities that govern digital assets. In the United States, there is mounting pressure from both industry stakeholders and international partners to establish clearer guidelines for cryptocurrencies. Such clarity could enhance market confidence, encouraging more investors to enter the space. The urgency for regulatory clarity is palpable, especially as global markets respond to the shifting political landscape and heightened scrutiny. Stakeholders are closely monitoring how these developments will influence regulatory frameworks across different jurisdictions, including Europe and Asia. Ongoing discussions around enforcement and compliance suggest a growing consensus on the need for a cohesive regulatory approach. This evolution could lead to increased institutional participation in the cryptocurrency market, paving the way for broader acceptance and integration into the financial system. As these dialogues progress and regulations take shape, the future of digital assets hangs in the balance. The cryptocurrency industry must remain agile and responsive to the changing regulatory environment, positioning itself for sustainable growth in an increasingly regulated world. Thank you for joining us today. Which story surprised you the most? Let us know in the comments, and don't forget to like and subscribe for more updates.